Monday, January 20th, 2020, Maneco 64, home of alternative economics and contrarian views. So this is going to be a different kind of video. It's not a trade recommendation. It's more like a trade idea, something that I would put to my clients when I worked in the City of London as a futures and options broker. I would look at the technicals, the fundamentals, and try to come up with trade ideas, option strategies. I did work in futures and options, so options were interesting to do as well. It's a good way to mitigate your risk. Options, when you go long put options or call options, you know how much you can lose, of course. When you short a futures contract, the sky's the limit, of course, and you have to pay margin. So this is for my viewers who are into trading. What about for other viewers that are looking to maybe start trading in the markets? And I'm not saying that the markets are fine, that you should go back into the system or anything like that. But you can keep playing the game as long as you have insurance outside the system. That's the way I look at it. Am I going to put this trade idea on? Maybe. And what I want to talk about today is the British pound or sterling or cable. I saw an article in the FT today. I'll go through it before we look at the technicals and what I think could happen to the pound versus the dollar, of course. So the article says bullish bets on pound hit highest level since April 2018. It might sound counterintuitive, but usually when these bullish bets are very high, it's a sign of a top. When it's vice versa, bearish bets are very high by speculators. It's a sign that we're near a bottom. So let's go through the article first, and then we'll go into the trade idea for the British pound and what I think could happen. As a lot of you know who trade, nothing is ever certain. You try to weigh the probabilities and look at all the different factors before putting a trade on. So analysts say sterling is vulnerable even as market positioning has become more upbeat. So let's quickly go through this. Says investors are incredibly bullish on the pound, even as the currency has stumbled amid rising expectations for a Bank of England rate cut and renewed Brexit uncertainty. Fund managers and other companies trading in the futures market have reached their most bullish point since April 2018. When I look at the chart, I'll show you what happened to the pound in April 2018 when we had the same kind of sentiment, and are now net long sterling, having spent the best part of the past 2 years betting that the currency will fall. Speculators, a category that includes individual investors, hedge funds, and other asset managers, had a net long position of 31,532 contracts as of January 14th, according to the Commodity Futures Trading Commission data released late on Friday. The change in sentiment comes as the pound has stumbled this year on swelling expectations that the Bank of England will cut interest rates as soon as the end of this month in a push to boost economic growth. The key rate stands at 0.75%. It says here, the UK remains fascinating to markets with bulls and bears bashing it out, said Kit Jukas, a macro strategy at Societe Generale. Sterling has fallen more than 2% in 2020 and was trading below 130 on Monday morning today, as it shed a further 0.3%. Dovish comments from policymakers and weak economic data have prompted markets market odds of a quarter-point rate reduction on January 30th to jump to more than 70%, according to Bloomberg data on swaps trading. Lee Hardman, currency analyst at MUFG, I think that's a Japanese bank, Mitsubishi Bank, has closed a short position on the pound against the dollar, given the market is now well priced for a rate cut. Well, that's the bullish point or non-bearish point, that they think the market has priced in the rate cut, and that sterling should stabilize. For the pound to weaken much further, the BOE would likely have to cut rates and signal strongly as well that a further rate cut could be forthcoming, he said. He could be right, but I think it's also important to have a look at the technicals, and I'll come to that in a minute. Others warn that the rising long positions leave the pound vulnerable. And this is a comment by someone from ING. It says, with net longs piling up, sterling's downside potential may be exacerbated in the coming weeks should negative headline news persist, said ING strategy Francesco Bazzoli, who noted that positioning will have been influenced by a widespread drop in long dollar positions. This is an interesting comment here from Mr. Jukes, or Ukes, I'm not sure how you pronounce that name, Kit Ukes. He says, with so many longs and unemployment data tomorrow, that's unemployment for the UK, and PMI data on Friday, sterling remains on the back foot. Sterling is vulnerable, added Mr. Ukes. Fresh questions have arisen over the UK's future relationship with the EU after Chancellor Sajid Javid urged businesses to adjust to a future where Britain no longer adhered to the bloc's rules and regulations. Several business groups reacted with dismay. So I'll finish off here. It says, Vasilius Kionakis, head of foreign exchange strategy at Lombard ODA, has revised his sterling forecast lower and sees the pound trading between 128 and 132 in the near term. Because of the lower dollar, we see sterling ending the year above current levels, but below its highs of around 135. So the guy from Lombard ODA, he actually doesn't see sterling moving too aggressively. He sees it staying pretty much within the range, which probably isn't great for trading. So I'm gonna look now at the technicals and tell you why I think we could see sterling move quite sharply lower. So let's have a look. So that article says that the last time traders were this bullish on sterling was April 2018. So if we look at sterling or cable in April of 2018 in this chart, it made a top at just below 144, and it's just on this trend line that I have here on the weekly chart. And after it made that high, look at how it dropped over the next 9 months. It was quite a major drop from like almost 144 to 125. Am I saying this is going to happen again? No, but it's possible. And the other reason why I found that article interesting about the sentiment is that right now we're like seeing a battle here around this trend line that I've shown you before. Some of you might remember this trend line in the last week or so, how sterling is fighting to get back above that line, but kind of failing. To me, that looks like interesting. The other thing I would say is, just like in April of 2018, we've seen a major top here around 135 late last year, and now we get this sentiment data where the long positions are very positive. So could we see another drop in sterling like we saw in 2018 after we hit the same kind of sentiments? It's a possibility. And especially with the fact that we're breaking below that trend line, I'll show you as well on the daily chart that we've got another trend line here coming from the bottom in September, October last year, and you can see how it's having a tough time stay above that trend line as well. So back to the weekly chart. What would I be doing here? Well, I like using options, so I would look to put on maybe 1 month put option, a put option that expires in about a month, maybe even 2 weeks. Maybe buy the 128 put, maybe buy also a 128, 126 put spread. This you have to work out yourself. Different people use different brokers. I use IG index. You might use IG index. Have a look, see how much premium you're going to be paying. You can choose if you're going to do a weekly or a monthly or 3 months. For 3 months, I would even maybe put something way out of the money, like at 125. So if we get a sharp move lower in the coming week or 2 weeks, you could see a little bit of pickup in that 25 put. And it doesn't even have to get near the strike. As long as it moves sharply, you get a bit of, how can I say, beta move in the options. You could see that option become worth quite a bit. If you have volatility pick up, that 25 put could pay off. That's the kind of trade I would be putting on right now. For those of you, of course, who are more into risk, less risk averse than I am, you could always short sterling or cable, go along the dollar, short sterling. But of course, that is very risky. You could get short squeezed, even though right now the sentiment is telling us that that might not happen, because you usually get a short squeeze when the type of people that are net long right now are actually net short. So that could be an idea as well. Just short the currency. As I said, this is not a trade recommendation. This is more for the experienced trader out there. For those who are novices, of course you can learn from this video, but make sure you do your homework. Make sure you know what a put option is, what a call option is. Hopefully you enjoyed this video. If you did, please give me a thumbs up. Share the video far and wide if you think it's an interesting video for others. And yes, if you haven't subscribed to the channel yet, think about subscribing. You can also follow me on Twitter, BitChute, Steemit, and on DTube. I wish you all a great rest of the day. Take care. Bye.